Let's dive right into Nasdaq. What I see happening right now is on par actually with what I was predicting to happen a few weeks ago at this point. We just closed about at this level, so if you see where it's at right now, it's very hard to tell, but I'll zoom out to show you where that line is actually from. It is signifying this area here. All right, and that was the last pullback that we had before the final push up. Okay, this was back in late October, early November 2020, so almost exactly 2 years ago at this point. So the first time we came very close to touching that one spot again, and now this is where we're currently at. So we are a few points short of that current mark. I'm still predicting that this is going to drop another 450 points from where it's at right now. Okay, so zooming in, I'll switch it over to the 1 hour view. Okay, and I'll stretch it out so you can actually see how close we are to that line at close. All right, this is it right here. This is where it wicked off. We were approximately 8.3 points away from that previous low almost 2 years ago. This could be considered like a pretty significant double top. The only problem is I believe it's going to drop much further down. Okay, by much further, I mean this time maybe another 450 points, followed by a long rally going into December, then dropping pretty significantly January, maybe to beginning of Feb. And from that point on, I'm expecting the bull run to begin. All right, we're going to get our bottoms in at about just below here. I do believe that this gap is going to close in, I was kind of expecting that run to happen now. But actually now I'm thinking that it's just going to bounce off that area. This is kind of where I made that box, pull up slightly and go back down. Yeah, I mean, we could be seeing a 7 Elliott wave move here instead of 5. Currently though, I'm gonna stay where I'm at. If it does drop lower than this point, then yeah, we're definitely gonna be heading to the 4 digits on the Forex charts anyway. So IXIC would be about 460 points lower than what you're currently seeing. All right. Yeah, I mean, as you can see, I drew this up back in June. Like, originally I thought this was the bottom right here. It did end up doing a little rally and dropped further down. So I got the bottom in about 2.5 to 3 weeks later. And from that point on, you know, I was able to draw up the target area and then the final target for the drop. Right, so the only thing I'm thinking right now is if I draw that trend-based fib extension, right, when I go right there, it shows me that we're going to be potentially heading down to this area. However, if it's not a deep extension, it's going to be right here to the 786 instead of the 1. Okay, that's why I'm predicting somewhere around this box the first time. I do not think we're going to get that low. So if I take the same drawing and we kind of predict what happened in the past, right? So let's go from 0 to 1 to 2. Okay, we see that that red area got snagged perfectly before reversing. All right, so that's why I'm thinking 2 potential zones, right? The first one will be around here, the 10,500 mark. And then finally that 9,500 mark. So about 1,000 points in between. So again, you see one of 2 things could possibly happen. Either we're going to drop another 2,000 points, which I just don't see likely to happen in the next few weeks. I have a feeling it's going to look something like this right here. We're going to be seeing a lot of that for the next little while. It's just gonna, slightly go up and then possibly a little lower, but that's what I believe we're going to be seeing for a little bit. Obviously, it's not going to go all the way for a few months, but definitely for a few weeks, it's going to be some sideways movement. Okay, based off of that, right? We made a slightly lower low from this point onward. So let's draw. What can we do right now? Let's see how this one looked like if we take a fib and draw it on the opposite way, right? It's exactly what we were expecting. So now if we take, we draw from the low to the high, you can see kind of where pullback territory was, and then it snagged there and dropped lower. But where would it possibly pull up to if it does hit that low? Okay, so I have a feeling that this candle pattern right here is going to be very significant. If we take the Fibonacci and draw it from here to the potential low that we see, right, somewhere in that box, let's draw it in the middle. You can see this is going to be the perfect area for a retracement before going down. And it makes sense. There is a gap that formed there and massive imbalance. So very likely after we get to this zone, this is going to be pullback territory. So what I'm going to do now is copy and paste this. Oops. Let's try to actually copy it. There we go. So right here. And I'm going to make the target right there somewhere. That's my new target for where it's going to pull up. Let's make it yellow and black, right? We want to have it be, oh, maybe the other way around. Let's go black and then with a yellow border. Yellow border? Sorry, I'm playing around. Not really necessary, but I just want to make it a little bit clear. Let's go a little thicker border there. Okay, so this is kind of the area I'm predicting for the continuation to happen, where the pullback is going to go. All right, and that's approximately 12,500. So from where it's at right now, that would be about 1,600 pips from where it's gonna, or points from where it's gonna be going right now. The potential low to that target area is gonna be about 2,000 point climb. Okay, it's not gonna be as long as this one, I believe. So this one we had it from, as you can see, June 16th all the way to August 16th. So that was exactly 2 months. And it went up 2,730 points approximately. Oh, sorry, I wasn't measuring. 2,700 points. Okay, so what we see from this area to the continuation will probably be about 2,000, 2,100, and continuing down. So yeah, actually, I think this is going to be a 7-wave move. So this is what I'm going to do right now to get to that final stage before going up. Maybe, let's try that again. Drew too many arrows somewhere around there, and then to this one. Yeah, that's where I was at, bro, right there. Okay, and I'm just gonna make that white. So now this, it needs to be shrunk a tad. Yeah, see, I drew too many little arrows. Okay, and then now this is going to be 6. Followed by 7. All right. So not necessarily in that type of speed. I'm just expecting these particular levels. When they're going to hit, that's a completely different story. I'm pretty good at predicting where the number it's going to hit, just not the time frame it's going to take to get there, guys. So bear with me on this. But yeah, from what I can see, it's definitely going to switch from a 5 to a 7 move, and very important. So when the lows come in here, which is about 400 points away, that would be a very sweet time to take some long swings upwards, right? So personally, I jumped into Carnival Cruise Lines because, it tanked 23%, and it's just too good. It's such a bargain for me. I worked for that company a long time ago, and I know all the potential. I know what they actually do on these ships as far as revenue is concerned. I know the operating costs, like the true operating costs, how much it actually takes to go from A to B, how much fuel they use, how much food is consumed. Like, it's just, those numbers I can't really share because of a non-disclosure agreement, but I do know them. And personally, I wouldn't say it's insider trading since I don't work for the company anymore, and I never bought shares. I wasn't a high-level employee by any means, but definitely enjoyed my time on those ships. So like I said, this is where I see us going for the long term, right? If it's going to hit exactly January 18th, that's going to be amazing. But I have a feeling somewhere January or February, these levels are what I'm going to be concerned about. Okay, so like I said, imbalance formed here right at a 618, and it's going with a fib channel line as well. Everything is kind of meeting up to this point, right? So that's where I'm going to be taking puts from. Like, my calls are going to be around here, or picking up stocks for swings for a month or two, and then selling around this area. Okay, and as far as the gaps are concerned, right now oh man, I lost the box here. Hang on a second. Let's draw this up quickly. What happened? Yikes. Okay, let's try that again. It's somewhere around there. Yikes. Okay. Sometimes it can get very messy. I think I jumped in on a larger time frame and accidentally clicked on the box, so sometimes that kind of nonsense happens. That's fine. All right, and then here we formed another ray. It's not gonna be closing, so I'll just shut this one. There we go. So two gaps were formed at the top. There's one at the bottom. We're almost at the halfway point in between that higher one and the lower one, and this is a resistance level. Sorry, a support level all the way back from November of 2020, and this one is even further away. So, okay, now quickly I'm just going to dive into my stock of choice, which I said was Carnival. So let's see what's going on here. All right, extremely painful. Did not expect it to drop to $7, but hey, my average share for this is $7.70, so I'm happy with that one. You could always say I jump in a little too early, but hey, we're never going to get the exact bottom, right? It'd be very nice, but I think somewhere in the $7 range right now, it's pretty good. Now, judging from how this looks like, where it's negative earning, negative, 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 I mean, you guys need to understand, right? Cruise lines didn't really come back into profit until maybe, April of this year? Like, it's been hard on them, man. It's like a year and 7 months or 6 months of just no revenue. The only revenue that they had was for future cruise bookings, right? And even at that point, they were selling them at discounts. So now, what's even worse is we're right in the cusp of, at the peak of inflation and interest rate hikes. So there's going to be a lot less people spending disposable income. It's going to be a painful year and a bit. I don't believe that this is going to last many, many years. This is not a depression that we're entering in. This is kind of an artificial recession because, again, it was caused by governments, right? And now the governments are punishing us further, right? As far as lockdowns are concerned, it was unnecessary to do it that long. 2 weeks I could understand, but dragging them out over a year was needless, right? At that point in time, there was a lot of information out, and it's just, trusting, to science isn't really going to give me any sort of peace of mind, really, because the science was a person at this point, and he turned out to be quite the fraud. Anyway, off that tangent, let's jump into Carnival and see what we can see, okay? I'm going to redraw these Fibonacci channel lines because now we've hit a new low, and we definitely want to include those peaks, right? So we got it all the way back from the 90s, okay? So this is what I'm going to do now. See, peak all the way to the low here. So, I mean, I'm glad that it kind of works out, but it's been climbing incrementally. It's just hasn't really worked out the way it makes sense. So what I'm going to do is draw the channel lines from, we got to do it from two highs or two lows and the higher low in between. So what is a good spot to draw from? You know what? I'm going to do it because I want to include what we have right now, and I don't think we're going to get everything we had in the past. So the best line that I'm going to draw on the channel is going to be here, this low and this low. Okay, and then the high in between would be there. But I'm not gonna, it's gonna be too much of a gap to go that high, so I'm gonna drop it till it's the 2. Okay, so as you can see, the 2 right there, it's pretty significant. It'll tighten up my lines a little bit more. And it almost gets the peak back in 2018. Okay, but now we're able to see where these lines are actually rejecting from before making any new lows, because it has been more or less on a decline. I mean, the peaks were hit in 2018, you know, recession in 08, that was the housing crash. So as an example, how much do we lose, right? Because again, that wasn't a lockdown recession, that was a housing market. So, yeah, it wasn't really artificial, that was pretty legit, but as you can see, it didn't last several years. Like, it was on the decline, like from the peak to kind of where it bottomed, normally would have been around 37%, right? And then this spike right here, everything came back within a year, approximately, like maybe 2 years, right? It took to get out of that giant funk. So what we're seeing right now is a lot of gaps that were formed, especially on the weeklies, right? So now we've made new lows right here at the $7.03 mark, and several gaps to fill, I would say. So here we go on the weekly right here. Okay, I'm going to switch the colors of my box back. That one's fine. 1. Okay. This gap was filled right there. So that's the big one that is going to be of interest for me back around the $40 range. It's going to take a while for it to come back to that. But I mean, we're at $7, right? For it to go up to 40, we're looking at almost, what, 600% increase. You know, that's pretty good. I would be very happy if it even got half that. It just depends on the time frame that we're looking at, okay? So technical analysis tells me that this is going to be a long-term goal. And if we take fib lines, right, just this one right here, from the high to the original low that we had, we can see right here was just a continuation back in 2020 and then dropped lower. That was a strong continuation. Okay, and now look, the 50% is exactly where that gap is. And now that we've made a lower low, okay, it's sitting in the golden zone. So I do believe that this will recover. It will take time though, guys. It's not going to be something that, you know, is going to start rising incrementally within months. I have a feeling it's going to be hovering between $7 and $10 for quite some time before it finally starts climbing out of its hole. And as you can see, right, we hit COVID lows, and then it had a big spike up, and then it started kind of dragging its heels, and finally it went up and sat in the mid to high 20s for approximately, you know, 5 months, and then it started dropping a little bit, right? So here's a fun little test and analysis. If we take that trend-based extension, okay, and we go low, high, low, right? Look how pretty that is. It's right in that zone of reversal, okay? Not only that, but if we just take a regular fib, go from this high to this low, you can see it just hit that 50%. right? So there's many things that kind of correlate, and the fib channel line now that we redrew is right at the cusp of these two. Okay, so lots of things would be telling me right here would be a great opportunity for a put. Now, where is it possibly going to go further on, right? So even if we did that one, watch what we do if we just draw a small fib, right? Even from these peaks to these lows, 618, and drop back down. And look, right on that purple line in the fib channel. Like I'm telling you, as long as there's two indicators that overlap in the same spot, it's a very, very, very good chance something is going to bounce off that, or it'll become a very significant tell. Okay, and then look what happens afterwards, right? Like this spot is going to be significant. If I take the fib from this high to this low, look what happens, right? Just peaks off there. I mean, once, could have got it twice. Where it dropped, kind of rejected off that pink EMA as well, right? And now look what we did one more time. From here, this high to this low, and I'll raise it a little bit. Look at this, 618, almost a pink line, rejection, and lower it went, right? So even in the span of a year and a bit, right, there was always a 618 retracement before it dropped lower. 618 dropped lower, 618 dropped lower. Right? Very, very significant when it comes to stocks. And Carnival is no exception. Now, what my target is for Carnival, let's see, from low, high to the low, right? Let's see what we can possibly find. Low, high, low. You know, so target would be somewhere around the $30 range. $40 would be fantastic. Let's see if it even climbs that high. So anyway, as far as technical analysis go, that's what I can see. Currently, it closed on that white line. If it's any indication as far as these fib channel lines go, we might be seeing about 550 in the near future before there is a significant reversal. Right, and every time we have, like, let's switch back to the daily. Every time we have earnings come in, because you could see this one. How much did this earning pull in? Like, this is when COVID was dropping too. It had earnings right at the cusp of, right at the peak of COVID. That was pretty painful. Right, but look at all the gaps that it formed on the daily. Here, here, but this one closed off, right, with all of this volume. And now look how significant this was. Everything was playing in between the two yellow channels. Right, finally dropped one lower, and now it's playing between the purple and the blue until it dropped one lower. Now it's playing between the two yellows again. Right? So now what are we sitting at? We were playing between a yellow and the white for quite some time. Now we dropped below it. So it could be now we're going to be playing between this white and this yellow. Right? So anywhere between $5.50 and $10, that's going to be coming up. And there was the gap that formed, right, between 8.43 and 9.25, I want to say, on the daily, but maybe it was 9.16. So anyway, technical analysis shows that this is very, very close to its bottom. If not, this was its bottom. It might have a pullback on Monday or Tuesday, but I mean, dropping 23% for a company that's been around for a long time. They own over 100 ships. Right? Especially, well, I can't say the entire company is owned. I can't say the entire company owns its own ships. I know that branches within Carnival own their own ships, specifically Holland America Line. They don't rent, they don't mortgage ships like a lot of other cruise companies do. They actually buy them outright. And everything made from the time of inception to the time they sell the ship, like 20 or 25 years later, it's all profit. Okay, so that Holland America is under the Carnival umbrella. And again, every single cruise line has been suffering. There isn't one that's going to be better than any others, right? It's just a matter of getting back in the swing of things. And Carnival has more higher-end lines within it. So, you know, ultimately, if I switch this over to, let's see, that didn't work, did it? So, right here. So I popped up Wall Street Journal Markets, and this is Carnival Corp and all its financial information. All right, so I flipped it over to the annual, and what you see here in 2020, right? That's the peak of when COVID hit. So we can see that as far as earnings go, they were pretty stable at first until, the last couple of years really screwed them. EBITDA isn't looking fantastic right now. It's actually dropping further on. Sales or revenue, we can see that's been shrinking. But again, even in 2020, people were buying up cruises until about beginning of March. And then after 2 weeks, they're like, oh, maybe it's okay again. They bought some up. So these signify cancellations and refunds, and any profit made would have been from future cruises. So what we're really going to see as far as the revenue stream from Carnival Corp is going to be within a year from now, right? Where everything starts catching up and the cruises are going full tilt. Lots of programs, lots of onboard expenses, for guests anyway, lots of onboard revenue that the company can make. So there's going to be a very significant increase in sales, and the balance sheet's going to improve as well, right? But as you can see, even when we do annual assets, they've actually increased during the pandemic, right? I mean, yes, the short-term investments also cranked up pretty significantly, and the debt also went up with liabilities. So there's one way to look at it. If a company has little assets but a lot of debt, that could also be a good sign, because banks don't really want to lose their investment, especially because those are the ones that are giving up the debt. They don't want to lose that investment, so they'll make sure this company is funded until either the banks break even or they get their money back somehow. No one really wants to lose $34 billion. Okay, but as you see, as far as assets go, it's in the mid to high 50s. So looking pretty good for that. Overall, the balance sheet would be in the negative, with the liabilities and debts totaling approximately $75 billion compared to like maybe $55 billion in assets, right? So you need to look at all of these, and once you see the kind of book value per share, right? This is what, on paper, what the share should actually be worth, right? However, again, this is only 2021 on a yearly basis, right? If we go on the quarterly basis, yeah, it makes sense where it actually dropped down to, right? So we're sitting at its approximate value now, okay? Like I said, when cruises start taking off, give it a year, and this is probably going to be at least 20, maybe 30 a share. Right, so in my opinion, I'm jumping into this. I like where this is going to go in the long term, and I'm looking years and years ahead. Right, I'm not looking for several months to make a little buck. This is going to be a significantly long-term investment, I would say, for a few years. And grabbing it at this price is kind of like a Black Friday sale. I don't think we're going to be seeing this price for a very long time, unless, of course, it drops that 550 like the Fib channel would show. But the next few weeks will really determine where it goes. If Nasdaq starts dropping, but Carnival kind of sits around the $7 range, it's going to be a very good sign that the bottom is in, and we're not going to be seeing it drop any further. So that's just my 2 cents when it comes to Carnival. Fundamentals aren't really my strong suit. Like, I understand a little bit, right? Technical analysis is more my thing. So I'll get in contact with my guy, who really is great at analyzing financial statements, and then we would be able to see if this is a good long-term solution or if it's going to be a dud. Okay, but right now I'm liking what I see, even though that it's been very dismal reports, right? The other one I want to check out is DocuSign. Now, where is it? Did I delete it? No, it's right here. Okay, so the other one of interest that I have is this, and when I drew this bar in, it was way over here. This is the gap that formed back in 2019. Okay, it just shot up. Look, it had negative earnings, and then it shot up still from 47 to 54, right? So pretty significant raise once earnings came in at a negative. And I mean, it really a little bit strange, right? But I think it's because there was a lot of projection and information showing that this is going to be the new way to do um, legal documents. NFTs might be heading that way, so I would say an NFT, if DocuSign can make them like an official NFT, that might actually be a very, very smart play on their end. But anyway, so my plan is I'm going to wait until this hits about 48, 47. I believe that's going to be the bottom of this particular stock. And if we check out Wall Street Journal, let's search for companies, Docu. Let's see what they have to say. All right. So currently, yes, we know all this. Financials. Okay, so quarterly book value, it's showing that it's extremely low. Annual, so I mean, it's definitely overpriced for what it's at right now. However, assets keep increasing. Debt is kind of, debt that has kind of stabled off and starting to drop. Liabilities have increased as well, though, but they're almost break even with their assets and their debts and liabilities, right? So from what I see, and yeah, net income is not really showing great for the quarters, but for the annuals, it's definitely increased. So I mean, maybe it is very overpriced. I was liking it at first, but $47 was what I spoke about um, with my colleague, and it seemed to be a very reasonable spot to purchase. So we'll still look at it, and but yeah, overall, I do believe that this company has a big future ahead of it as well. However, financial statements look kind of opposite of that, even though they do look better than Carnival, right? As you can see, it's exponential growth year over year. And yeah, free cash flow is always good. Capital expenditures, that's expected. Every company is going to have large capital expenditures when they want to grow, right? That includes advertising and upgrades to software and all that sort of stuff. But anyway, maybe not super inclined to jump on DocuSign, but I definitely like Carnival. So that's what I have for this week. Just be careful when it comes to taking any calls until the bottoms are in. And again, judging from where it's at, we're very close. I would say another 400, maybe to 450 points to drop. Once it gets to that range, then I'm going to be comfortable grabbing some long-term swings. All right. Hope that helps, guys. See you in the next video.